I don't really view gold as an investment. I view it as money.
They now have to keep printing or we crash.
We've got this ticking time bomb.
Talking gold with the one and only Andrew Maguire.
Welcome to Live from the Vault.
Hi there, my name is Shane Moran and I'll be your host for this week's episode of Live from the Vault. And welcome to the show that goes beyond the headlines and uncovers the truth about the precious metals industry and the effects on the global economy in these historic times. With exclusive access to experts and insiders, we reveal information and insights that you simply won't find anywhere else. Now, this week, we have the one and only Andrew Maguire, precious metals expert and whistleblower in the vault. And to help him pull back the curtain, we'll be joined by popular demand, I must say, by the Live from the Vault community and a good friend of Live from the Vault, industry expert Bill Holter. That's right, Bill Holter is in the vault. You're not going to want to miss this conversation. And just before we get started here with our special guest and we head over to the UK, please help us spread the word about this channel by hitting that like button right now, not now, right now. Share this information. And also, if you haven't subscribed, go ahead and do it right now before we introduce Bill. And if you want to be notified as each episode goes live, just click that bell and we'll do just that. Now, let's tell you a little bit for the guests that do not know, have not met Bill Holter yet. You know, Bill was a stockbroker for 23 years and a branch manager for 12 of those years. And he was a contributor to the GTA GATA, our good friends from GATA, since 2007. And he began writing for Miles Franklin from 2012 to 2015. And then he joined up with Jim Sinclair and the Holter Sinclair collaboration from 2015 all the way to 2022. And Bill is a precious metals expert. You're going to love hearing from him. He's a broker also, and he clears through Miles Franklin, and his work can now be found right on billholter.com. So be sure to visit Bill at billholter.com. Okay, so billholter.com. And with that, let's head over to the UK and Talking Gold with the one and only Andrew Maguire and our special guest, Bill Holter. Over to you, Andy.
Well, Bill, it is, again, a privilege to have you back for a chat with us. We've had, you know what, I can't believe how many requests we've had for you, my friend. Everyone knows you as a straight shooter, common sense guy, very insightful views into really what is the smoke and mirrors world of the complex, very complex global markets. And you have a really good way of saying it how it is, without too many words, and it's just, I love it. And so maybe we start with, I think, the elephant in the room. I guess, Bill, you know, and this is something which really your expertise is so much valued. I see, well, global yields, they've reached kind of record highs, the 10-year Treasury hitting 2007 highs. But really, I think rates look like they're pretty much close to where they were around 2001, 2002-ish, thereabouts. And then obviously we're gold guys, but obviously there's a wider picture here. But gold was trading at $300. and again, this kind of, it speaks volumes because really what it says to us is, look how, I mean, this is the same gold. It's never been anything other than the same bar that owes nothing to anyone. And yet it now takes thousands of dollars or pounds or euros to buy the same bar. Tell us what's going on, Bill.
The currencies have been diluted. That's what's happened. Yes, we're back to where rates were in 2001. If you look at what's happened to rates going all the way back to 1982 at the very peak, what would happen is the Fed would lower rates after some type of crisis. And as they lowered rates, then the bubble would begin to expand. And the bubble would expand until the Fed raised rates and something would break. And then, of course, they'd have to lower rates again. So it's been a cycle all the way back to 1982. And interestingly, each peak in yields has been lower than the previous peak. until now. So if you look at it on a chart, you can see, on a very long-term chart, I mean, I'm talking, 40, 50 years, rates are turning higher. And the problem is rates are turning higher at a time where debt is so pervasive now. Debt has become the foundation to the global financial system. And raising rates on massive amounts of debt requires debt service. And there's your mathematical problem right there, is that let's look at the U.S., for example. With interest rates going up, we're now at 33 trillion in on-books debt. There's a crap load more of total debt, but just look at the on-books debt. If you take 5% on 33 trillion, you're talking better than 1 trillion. It's a trillion and a half per year in debt service. That does not work. The math does not work with the amount of tax revenue that they're taking in. So the mathematical problem is about to blow up. And this morning, we're at 474. I speculated a year ago that once we got through 3.25, something would break. And sure enough, back in March, April, we had the 4 banks blow up, which, by the way, that's more assets in combined than all of the bank assets from the bank failures back in 2008, 2009 combined. So the problem's already bigger, but they swept it under the rug back in the spring. And here we are now with interest rates, 1.25 points higher. And we've not even talked about, mortgages for homes, mortgages for commercial real estate, et cetera, et cetera. The bottom line is they are in the process of breaking something, and that something is the entire system.
Bill, is this has to be deliberate. I mean, you hear the term "build back better" all the time from the same narrative guys all over the world. It's almost like they're in a test tube, and it's like, well, that to me means you have to break something first before you build it back.
You're absolutely right. In my opinion, this is absolutely a plan. I believe the whole thing has been a plan since 2007 because the policies they were putting in place back then and ever since then have been too stupid to be any type of mistake at all. So I do believe it is the plan. And I think the ultimate plan is bringing out central bank digital currencies on a global basis. And that, of course, gives whoever's running the show, it gives them total control because they know anything and everything that you do financially, down to a stick of gum. They're going to know you bought it. It also gives them the ability to shut you off. It gives them the ability to shut you and I off because we're not talking the mainstream talking points because we are sandpaper to them, and it's a way for them to snuff us out. And what I'm getting at is they're going to break this thing so bad that the public is going to beg for a central bank digital currency, even though there's going to be, I don't know, maybe 20, 30% of the populations are going to know what the real goal of central bank digital currency is. But things are going to be so bad just in order to eat. Please give us the central bank digital currency. We have to have some semblance of normalcy. And that, in my view, is the powers that be snapping the trap shut on the populations.
That is pretty scary stuff. And I think, it has to be. I mean, this is the thing. It cannot be by mistake. And I think that's one of the things that and the thing is, it's a global narrative. It's the same thing, whether it's the green agenda or whether it's they've tried with COVID, one thing or another, digital passports. We've been going through quite a big thing over here. I don't know if you know of Nigel Farage. He is I've been on his show. He's a friend. He was debanked recently. Coots debanked him. And he then did a what you call a freedom of information inquiry. I think it's called a subject access inquiry here. And he found out he was debanked for the purpose of his views.
Right.
Absolutely. And then we find out, long story short, they find out not just him, but anyone dealing in cash is being debanked. And we find that over 1 million people have been debanked just in the last year or so. And it's there's multiple thousands a day being debanked. And I think so clearly there is, as you say, if you have an opinion about something or you have in fact, social media accounts are linked into your bank account now. Mind blowing. What is this? A bank is supposed to do banking. A bank is supposed to be a utility, which is as important as water and electricity. And yet they're using this banking leverage to exactly you think this is actually part of the process, slowly debank people. Hopefully they don't notice. People are too embarrassed to say, I've been debanked. And then suddenly you find somebody on the mainstream media says, all these millions of people have been debanked. And I understand that is also going on in your country.
Yeah, it is. And of course, there's massive censorship on social media. The mainstream media itself is part of the plan. I mean, we're fed disinformation. And I don't necessarily think that they're trying to do the debanking quietly. I think what they're doing with the debanking is more or less making a threat to people like you and I. Don't talk about what you're talking about, otherwise you're going to get debanked. So I think it's used as a threat. And of course it is used, to actually shut some people down. But my view is it's being used as a threat, to make people think twice, 3 times, 4 times about actually expressing their opinion.
Interestingly, comments really, I was going to ask you, your view on the BRICS, the BRICS movement, the setting up of an entire a multipolar system, which in all at face value looks very much like it isn't. It is going to be an equal situation where one hand rubs the other. One can only survive because of the other. You don't really, and people think that China, bad Russia, bad, basically that they want hegemonic control of the globe. I'm not so sure they do, Bill. What are your thoughts?
Yeah, I don't believe they want to replace the United States, but they want an alternative to the United States. They want an alternative to the West. I've said all along that I believe if you want to call it the rest of the world, they just want free and fair settlement. They want to be able to trade. They want to be able to exist with, they just want to do business. And we've acted as if you want to call it a bully. We've been a bully for the last 50, 60, 70 years. It's either our way or the highway. So no, I don't think the BRICS is bad. I don't think they're trying to take over the world and run the show. I think they want to do business, but they don't want to do business with a foot on their throat, and that foot is from Uncle Sam.
I think so. Let's get on to I guess one of the key aspects that's been driving the dollar since 1971, I guess 1972, whatever it was, when basically the oil for the dollar trade was instigated. And I think I heard you make some recent comments, or I think it was on your website. I had a look on your website. There was something about, you were talking about something about, hang on a minute, you don't necessarily need dollars to buy oil anymore.
Yeah, that goes back to 1973. That was when Kissinger came up with the idea of a petrodollar, where the Arabs, particularly Saudi Arabia, would only accept dollars for oil purchases. And what that did was it forced pretty much all nations to buy dollars with their own currencies in order to make settlement on oil trade. And now, of course, I guess it was even 2 years ago, Saudi Arabia started cutting deals in currencies other than dollars. And what that means is the dollar is no longer as important, and nations that are able to trade in other currencies, euros, yuan, yen, what have you, those nations no longer have to make purchases. And since they don't have to have dollars, those dollars are leaking out. So the importance of dollars has declined drastically. And I think what you're seeing here in the dollar index, and remember, the dollar index is against other currencies. It's not against real goods. If you look at real goods, the dollar is being debased. But if you look at the USDX, the dollar is strong. And I view this as a final flame out move, if you will, a short covering squeeze. And once the squeeze is done, once the contracts that are in dollars have significantly rolled off, you're going to see a collapse in the dollar. I think you could see the dollar trade to and through the 80 number, and get down as low as maybe 50, 60 on that index. Right now, foreign nations, because of the weakness of their currencies versus the dollar, you're seeing huge inflation. Inflation is, and I mean, look at food inflation, and that's probably the most important inflation because that affects the masses.
Yeah, and I think you're right, and that is because that is the ability to survive. So that is interesting because the lack of need to actually convert your own currency into the dollar to then purchase oil.
I've got one more point I want to make. We are seeing a big spike in interest rates, and we're told that the Federal Reserve is raising rates. That's why rates have gone up. I don't believe that at all. I think rates would have gone up on their own. And I think we're very close, if not already there, to the point where bonds are being sold because investors understand that they are, call them certificates of confiscation. There has to be a risk premium to debt. I mean, that there's always been a risk premium.
Yeah.
That you're going to have a higher yield on something that you're more suspect it's not going to be paid back. And I think that's entering the equation now as far as I got to fly here. I think interest rates are rising because the risk premium is now coming into the market. And there are questions as to, are you really going to get paid back or not? So I think that's one of the reasons that interest rates have risen. I don't think it's purely part of the plan or, the Fed actually doing it and the central banks actually doing it.
I mean, do the Fed have any control, really? I mean, obviously last couple of days, you see Powell on there, you see Mester coming out. I mean, they're talking gobbledygook. I mean, basically, when you distill all of the words down, it basically says, we don't know what we're doing. We're data dependent. In other words, we're flying blind.
They are flying blind, but I do believe that I think this plan goes back to 1913 when the Federal Reserve was created.
Yeah.
I think the plan was to get the United States indebted. Central banking is all about control, and you can control business. And I think the plan was to get the United States indebted, massively indebted. And here we are. The whole world is massively indebted. You raise rates, you blow up the whole system. And then what's left? What's left is much easier to control countries, to control populations, basically to control everything. So while I believe that this is it's the final chapter of the plan. I believe the plan went all the way back to 1913 when the Federal Reserve was created.
Yeah, I think you're right. Absolutely. And that was the ability to, I mean, wouldn't I love to take my checkbook, stroke myself a check, and then pay all my bills and stroke another check? I mean, but as you say, wheels within wheels, there's a plan. Clearly, there's a plan, and so we seem to be way down that road. And where do you see this thing, the inflection point, where it does explode? It has to, Bill. From what you're saying, it has to go.
Yeah, I think we're right there. I think maybe a 5% print on the 10-year Treasury would do it. Going back to what we were just talking about, I think it's very interesting that a couple of years ago, year and a half, 2 years ago, the Federal Reserve was rolled into the Treasury. So at that point in time, the Federal Reserve had about $65 billion in equity. That's what was holding up the banking system, was $65 billion, which today is not even the mustard on a ham sandwich. Once they got rolled into the Treasury, then the Fed's balance sheet became the Treasury's balance sheet. It could be hidden. It could be covered with all the bonds and past CMOs, bad derivatives assets that the Federal Reserve holds. They've got way over $100 billion in losses. So what that suggests is that the Federal Reserve itself is insolvent, but that's being hidden by the cloak of the U.S. Treasury's balance sheet. What I'm saying is the powers that be, the Federal Reserve, the U.S. Treasury, they're insolvent. And I mean, that's pretty clear on a large basis. The U.S. can't even open its doors the first day of the fiscal year without knowing that they're going to have to borrow at least another trillion, probably $2 trillion per year, just to keep life looking normal. And you started off, you started off the interview by saying, and I'll paraphrase, everything's a lie. And that's a pretty big lie, is that the entities that issue the currency are broke. So if they're broke, then what's the currency worth?
Absolutely. And I think we're talking about, again, still talking about the dollar in a sense. And so I guess really what, you know, obviously there's a couple of things here, but I mean, I'd really like to know in a minute what you think we should be doing about it. But let's have a look at what we're seeing from our wholesale side of the market. And what we're seeing is, interestingly, as far as gold is concerned, is we are seeing the only central bank left short gold is the Fed. The only, because we see back in November 2022, when gold bottomed at $1,618, that was the exact point that the Bank of International Settlements squared up their over 500 tons of leases, swaps, etc., and went long. Every single first-tier bullion bank liquidity provider we deal with, they're all long gold for their own book. So clearly there's something else going on here. And of course, we're not talking, and since Basel III NSFR standards came in on the 1st of January, if you are a liquidity provider and you're providing spot gold to the market, you have to have the physical. You simply have to. So obviously the game right now is how much of that can you offset in the COMEX against the speculators who will never take delivery. So it's kind of that one little balance. So it's improved, but there's still, the problem is still the speculators in the are siloed inside the COMEX. And obviously we had to get rid of all our US clients in 2013 because they were no longer allowed to access these spot markets. Right. This is a progress. So, and then when you think, yet the market making bullion banks who have a foot in the COMEX and a foot in the spot markets, which are now physically deliverable, they can trade when there's a COMEX halt for 5 minutes. They can continue trading. In the options market, 3-minute halt. In the COMEX, they can still trade. So, I mean, really, when people look at this picture, and I mean, really, you have to know that most US traders, citizens, CTAs, apart from a few that I know who, like self, I'm sure, who are long physical gold for a reason, and because it's a hedge and because you're utilizing it. And some of these guys are actually long paper gold, simply using it as a proper hedge again and are not rinsable. It's an interesting because we're seeing, I don't think they wanted this to happen. And I think, so you've got the US on one side, you've got Europe on the other side, who have bitter experience of inflation, wars, etc. And I know most of my German clients they have gold savings accounts. It has never stopped. It's never stopped. So it's an interesting, but I've got this vision of one meeting the other, and they're not quite agreeing.
Well, first off, I was one of those clients that got kicked out in 2013.
Okay, yes.
You're speaking from if you want to call it a trading aspect, because hedging anything with a paper contract, when this system blows, all those contracts are worth zero. And what is the value of a contract that cannot perform? It's worth zero.
Yeah.
So on a big picture, and I don't know, I mean, I can't tell you exactly what the number is, but I'll just use broad numbers. And I guess I'll ask you a question. What if a sovereign, or not even a sovereign, just some hedge fund, stood up and publicly said, we want to buy 5 billion or 10 billion of gold or silver? God forbid, if it was silver, you'd blow the top off of it before the words came out of the mouth. If that were to happen, if somebody publicly said, I want $5 or $10 billion, that's going to be a failure to deliver. And the entire game is over, because what you've done is you've drilled a hole in the foundation, put dynamite in there, and lit the fuse. It blows up the entire financial system by creating a failure to deliver. Now, I know you know this. Probably many of your viewers know this. If we know this, you could pretty much bet that Russia knows this, China knows this, any adversary of the United States knows this, that they could blow the system up with a super small number. I mean, 5 or 10 billion today is nothing. Look at the average treasury financing. What are they? 30, 50, 70 billion dollars at a clip. So just a small portion of that would completely wipe out inventory. There'd be a failure to deliver. And human nature is, if you can't have something, you want it even more. And that's what it's going to create.
Yeah, that is so interesting. And I think you're right. It kind of morphs into also what we're seeing now. Again, we're talking about, yes, what if that happened? Now, obviously, if they turn into the COMEX for it, it's not going to happen.
Right.
But what is interesting is, since the 1st of January, with Basel III standards, NSFR standards in place, if I go into the spot market, now, obviously, I can go to the spot market, and as long as I keep it within a certain parameter, I can have T+2 delivery. But when you start getting into the billions, into the tonnage sizes, that is, maybe, and we only see 3 to 5 tons cleared in the London PM fixes, when we know there's far, far more gold cleared in transactional moves, physical gold cleared.
Right.
So basically, this is an interesting dynamic, because this gold is actually now flowing into other markets. Now, so each ounce, gram, ton that flows out of Western, what I call the LBMA CME ring fence, this incessant game where one is played against the other, but leverage works in two ways. So as that flows out, if done stealthily, because you would be stupid to come and try and break the market. I mean, you're not going to get anything. So stealth, softly catchy monkey, I guess, is the expression. And I think what we're now seeing, and this is interesting because I've just done something on this because we have contacts who access this arbitrage trade. While it's almost impossible to arbitrage the China trade, it is possible to arbitrage the Moscow trade. And so we are seeing, I know of people who are accessing this trade. So I can now pick up every single day at the PM fix. Moscow will pay me $3 more an ounce. Okay, so, and it's NSFR deliverable. But even better, the Moscow deliverable futures contract is paying me $40 an ounce more, actually mirroring April COMEX futures almost to the tick, April contracts. Now, so as an oil trader, as somebody who needs to buy oil, I know that I can go and get probably a 30, but by the time you remove the friction off the transaction, I can get my oil $30 cheaper than anyone else, and I can sell it back into the market. So what's interesting is, so I can now come to London, I can pick up a deliverable NSFR compliant contract just at the right size that doesn't force a big premium. And then I literally, bit at a time, I take this bullion and I literally present it to Russia and swap it. Just swap it. It's not even currency. I'm just swapping it for a resource I want. And actually, word is, grain is now part of that process. And obviously, this is early days, but that's changing. That is somehow changing the control that COMEX was designed to keep control. You were locked in the COMEX, essentially, or attempted to lock you in. Now, it looks like this game is changing. And your thoughts on that, Bill?
Yeah, the reason the game has changed is because I think the number was $80 a barrel. The $80 a barrel cap, if you will, in order to, you could buy oil from Russia under that number. Over that number, you can't. So human ingenuity figured out, okay, we're not paying for it with dollars. We're paying for it with gold, or we're paying for it with wheat, or what have you. That's why this arbitrage has come about. And I do want to ask you that question. Do you think a $10 billion order, I'm pretty sure you're going to tell me that a $10 billion order wouldn't be filled, especially if you did it publicly. But do you believe that a $10 billion order could be filled over a 2 to 4 week period of time? Do you think that type of metal is available?
Not at this price. That's the thing.
Exactly.
Not at this price.
Okay.
Yeah.
Good.
And it's the same tonnage of gold, but it's just gonna, as you say, there'd always, Bill, you and I know that. There'll always be a seller. I can go into my drawer here. If gold's trading at $5,000 an ounce, you know what? Actually, I might swap some of that for something else. Maybe I'll swap it for another commodity. I might even swap it for a bit of fiat and have a good time. But I think it's interesting because this is, I think that's the interesting part about this, is that while they're suppressing this price at the COMEX, that tail's wagging the physical dog.
Right.
Whereas before it was NSFR compliant, endless game. But now it can leach out. And I think this is so interesting.
Yeah, you're right. I mean, just the fact that what you're saying is there's more avenues, there's more ways to do the same thing. And in the past, you were locked into either LBMA or COMEX, and you couldn't do it. And I mean, think about this, Andrew. If you had the ability to put in a $10 billion order, and I had this conversation probably 10 years ago with Eric Sprott, and his response was, would you really want to be the one who blows up the entire global financial system and destroys life as we know it? That's number one. And number two is, would you really want to be known as the guy who did that? Because you probably have a short life.
Well, countries have proved that, haven't they? Anyone who's ever
Yeah,
tried to do,
Gaddafi,
yeah,
Saddam Hussein,
yeah.
examples.
And now they're finding it very difficult with Russia. And I think Russia is obviously this whole Russia thing. I have a complete. To be honest, Bill, I feel sorry for both sides. I feel sorry for all the people who are being ground into this killing machine. For what?
I agree.
It's so sad. So I'm not supporting Russia. I'm not supporting Ukraine. I'm just simply saying what kind of this is again about hegemonic control. It is they see. I think they see Russia and China, which is coming into their crosshairs, their hegemonic crosshairs constantly. They see that as the threat to the plan, the plan that we've been talking about earlier, which is they've
Right.
had complete control of this plan. I'm just wondering if they're a little bit worried.
Well, I'm sure they're absolutely worried. Uh, I mean, they can't, the United States cannot bully Russia. The United States cannot bully China.
Mm.
That China and Russia are going to do what is best for China and Russia. You said you're not going to take sides. And what I will say is I would urge everyone. I think there's been 4, maybe 5 speeches by Vladimir Putin ever since the very first day of the invasion back in February of 22. I would urge people to read in full every single speech that he's ever done and find out and think, is there anything in there that you would disagree with as a human being?
Mm.
And I mean, I've read them and I do not disagree with what the man says. He's talking about what we were just talking about, free and fair trade.
Yeah.
That's what he wants. And he's talking about Russia's borders not being infringed upon by NATO. They were promised in 1998 that they wouldn't move 1 inch.
Yep.
And all you have to do is look at an interactive map and their border is surrounded. So as far as taking sides, I would just, before you decide, Russia good, Russia bad, whatever, I would urge people to read Vladimir Putin's statements because I think they are, they're common sense. It's what any leader would want for his own country.
Bill, I agree with you, and I think when you think about it, this conflict started in 2014, actually, and that really regime change, all part of a plan. It just, it is again, it's the U.S. hegemonic military machine and at work, and I think, and also when you think about it. One of the reasons, I mean, Hillary Clinton refused entry to Russia into NATO. They actually made an application. Of course, it only makes sense. And as you say, it is no surprise that Russia moved in to protect citizens being murdered. And I think a week before, people don't talk about this, but a week before the military intervention came in,
Yes.
there was something like 4,000 or 5,000 shells fired into Ukrainian people. I mean, they may have been Russian speaking, but they're Ukrainians, and they were being murdered. And I think that's the reason he stepped in. I think Article 51. He invoked Article 51, which is I have the right to come in and protect these people. And I think people forget that it's Russia bad. And to be honest, I mean, what's going on, Bill, is worrying me. And I kind of think, are they losing this game so much they need a war, like a third world war? Because when you think about it, just this week, and I cannot believe this only happened 3 to 4 days ago, a particular minister in this government of ours is going to send British troops in uniform into Ukraine to train Ukrainians.
Yeah.
Good God. I mean, Are they crazy? I mean, so is it a coincidence that Putin caused a nationwide test of nuclear, in other words, preparing the entire population for nuclear war,
Right.
him in his bunkers, people being warned 80% of the infrastructure is going to get ruined? They're preparing for the worst. This is crazy stuff.
Well, first off, from the standpoint of the U.S. or / West bullying, I think that's pretty much over. And I say that's over because the West does not have the ability to bully anyone. I mean, look how the U.S. left Afghanistan. We got our ass kicked, and we left them with $85 billion worth of equipment. The days of you better not do this or you better not do that, or we're going to come in and, blow you up. Those days were gone. I just, you ask about World War III and the danger, in my opinion. I mean, I don't think that World War III is going to be started by Russia, China, something outside of the West, because the financial system is so upside down and so obvious that it is going to completely collapse and make 2008, 1987, 1929 combined look like a kindergarten party. The powers that be, and I've said this for probably 6 or 7 years now, when all is said and done, the West is going to have to kick the financial system. They're going to kick the financial system over, but they're going to need something to blame it on. They're going to need to have something to say. Our policies were working. They were working just fine, except for what? Nuclear war. They're going to have to point at something. And I mean, the most obvious would be World War III.
Yeah. And unfortunately, it's a factor that has to be considered. And I think unlikely as it seems, because no common sense thinking, logical person would think, well, that is ludicrous because you're just going to wipe each other out. And so really, maybe that's the one thing that's always been that detente, where you won't do it because you'll be wiped out yourself. So maybe it's jockeying, but nevertheless, very, very dangerous.
I agree with that, but you have extreme narcissism running the show.
Yeah.
And these people are going to be looking at, okay, so which is worse? Blowing up the world and me probably being blown up too, or the world continues, I'm completely embarrassed and put in jail for the rest of my life. I mean, what is a narcissist going to choose? Blow everybody up.
Yeah.
I mean, it's just, that's human nature.
I think you're right, Bill. And unfortunately, one has to consider all aspects of it. And now you asked me a question about gold, and now you're the silver man, as far as I'm concerned. I think you, a long time ago, we talked. In fact, last time you talked, you figured silver was a very interesting animal, and that quite separate from gold, which is an investment asset. But you, and a lot of people have disagreed with me about this, but I agree with you. Silver, I believe, is the barter currency of
Right.
When things collapse, silver will be the go-to barter currency.
Yeah, absolutely. I mean, just think about trying to buy a dozen eggs. Here in the U.S., in a barter situation, you would use a pre-1964 dime. There's no way you could buy groceries with gold, because you could never get change back. And the reason I've been so bullish on silver is basically just the ratio. Right now, it's 85, 86 ounces of silver to buy 1 ounce of gold. It comes out of the ground at 10 to 1.
Yeah.
That's God's ratio is 10 to 1. Man's ratio is 85 to 1. One of them is right and one of them is wrong. Silver at this point, I believe silver is the cheapest asset on the planet. And it's not just an asset. It is also, yes, it is an industrial. It's used from an industrial standpoint. I mean, you name the uses, whether it be medicinal, solar, technological, et cetera, but it's also money. It's a hybrid. And gold, you mentioned gold as an investment. I don't really view gold as an investment. I view it as money.
Yeah.
Gold it's been the money of kings for, forever. And if you think about, what's the best thing to do if you know you're going into a recession, depression, financial collapse, you want to go to cash. The only problem is cash today, in today's world, cash has been bastardized because it's fiat. It's backed by nothing. It's really not cash. It's a contract. It's a loan to whoever issued that currency. Whereas gold itself is money. So I guess what I'm getting at is if you believe that the system is coming down, or not even just coming down, just say you believe we're going into a bad recession and things will be okay on the other side, you got to get to the other side. And in order to get to the other side with wealth, you have to be in cash. And truly cash is gold, because gold is money and nothing else is. Everything else is credit. JP Morgan.
Yeah. And I think the beauty of it is it owes a bar of gold in your possession. It owes nobody anything. All the energy that was ever put into it is there.
Exactly.
And so it's not that it ever goes up in price. In the last 5,000 to 6,000 years, it hasn't gone up in price. It's just going to take a hell of a lot of more dollars to buy, or pounds or euros to buy that same bar.
Yeah, an ounce of gold 5,000 years ago is still that 1 ounce of gold. It has not changed.
Yeah.
What has changed is the currencies used to make purchase of that. And because currencies are issued by governments are run by human beings. Human beings are greedy. They're gonna overissue the currency, dilute it, and that's why gold continually, over the long run, costs more and more in terms of fiat currencies.
And the same thing is almost true. I mean, the desk I'm sitting on, this cup, anything, it's going to cost more dollars and euros to buy it in a month or two from now.
Even down to a cup of coffee.
So, which I guess really the last real question I was going to ask you is, people are telling me I'm going into cash. I mean, you've just outlined.
Right.
What a fool. That is an investment decision you're making, and you don't realize, what people don't realize is not only what you've just said, but the ability to bail that in when things go wrong. Wouldn't it be nice to be able to take your money?
Yeah, and that's already law. I mean, I don't know what the banking laws are in Europe. I do know the FDIC back in 13, 14, wrote into their bylaws that there will not be bailouts, there will be bail-ins. And, people who say I'm going to cash, what they're missing is there are several risks. One risk is that your bank goes under and they take your money to allow the bank itself to survive. And the other risk is you're putting dollars or euros or yen or yuan or whatever into the bank account, and you're going to get those back out. But what are those going to be worth in 6 months, a year, 2 years? Once the credit cycle, make no mistake, the credit cycle has absolutely turned. Once we have a credit event, a credit collapse, then you're going to have currencies that will approach zero, because all fiat currencies are credit based. And that's the problem, is that the system is over levered. The current debt outstanding can never, ever be paid back in current terms. The only way to do that is to create more and more of the currency. So you create more and more of the currency, you dilute it basically to zero, and everything's worth nothing. No one gets paid. The financial foundation is gone.
Yeah, and think, as you say, that's actually global. As you say, that mandate is global.
Yeah, absolutely.
Yeah. And so now, so people who, and this is interesting too, because people think, oh, it's safe to race into a money market fund at I'm getting 5.5% or whatever it is. And after the 4 banks imploded back in March, I think it was March or April, we saw a lot of deposit outflows coming out as well. People saying, well, hold on a minute, these regional banks are paying me 1% or less. So they take all their money out, again, causing more problems, causing by pulling the liquidity out of these banks, they're weakening the very banks that built America, the very bank that you could go as a farmer to and say, my grain crop's in, I need a new tractor, and he would know you and he'd give you the loan, and it would be done on a handshake and with trust. And these same people are taking liquidity out of the system, parking it in a money market fund, which can be gated at any time and bailed in for periods of time. And to me, it's a sad thing.
Well, that phenomena is still occurring. I mean, you're still seeing massive outflows from banks and into money markets. The problem is you got to look at what is in the money market. It's mostly commercial paper. It's just credit. Mm. You're jumping from one skillet to another skillet, and that move from one skillet to another skillet is making the previous skillet weaker. It's making a credit collapse more likely. Or I shouldn't even say more likely, more guaranteed, I guess you could say.
Yeah.
So it's shuffling the deck chairs on the Titanic, and the whole idea is to not be on the Titanic and somewhere away on a golden lifeboat.
Well, Bill, the last thing I'm going to ask you is, because people hang on your every word here, and I think honestly people should listen to this more than once. Okay, so here we are right now. We don't 100% know when it's going to happen, but you've outlined clearly that we're going to see some kind of implosion here. It's coming. What really, I mean, obviously it depends on what assets you have, and there may be people who don't have any assets. So obviously, but generally speaking, what would be the best advice for people? We've mentioned don't put your money in a bank necessarily. You've mentioned silver. You've mentioned gold. What should people really be thinking about now?
From a financial standpoint, you want to get out of the system. You don't want financial or any intermediaries between you and your capital. From a personal standpoint, you want to become as self-sufficient as possible. You want to strengthen yourself. And financially, you want to pay down debt if you have the ability. And I would not necessarily pay down debt with gold or silver, because if you've locked in a low interest rate, you're going to end up paying off funny money with real money, and the real money, it'll take you way less ounces to do it. From a personal standpoint, you want to get stronger. You want to have people around you that you can rely on. I mean, there's no way you can go it alone, but you certainly don't want to even try to do that in a city. You want to be rural. You want to have food sources. You want to have the ability to purify water. You want the ability for power. If you have addictions, end your addictions now while you can, because you're going to be forced to later. Get yourself physically fit, mentally fit. Get yourself right with God and Son Jesus Christ. Just get your life right, because what's coming is going to be complete chaos, and you don't want a bunch of loose threads hanging out that can be pulled on. You just want to become as self-sufficient as you possibly can.
Bill, take that on board. I honestly take that on board. We all take that on board. I think we're all of a like mind here. We all want to take responsibility for ourselves. We're looking at ways to do it. This education is the way we discern what works for us. And everything you've just said is bang on, 100% bang on. And I really do encourage people, because if they come on your website, which of course is billholter.com, straightforward, easy to remember, and they will get to read these exact thoughts that you have. I've read several of them. And they go everything from education all the way through what is, and it's common sense stuff. And I think, it's great. And it's just nice and refreshing to hear a common sense voice and opinion, your esteemed opinion. That algorithm in your head has said, here's all these inputs, but this is what I think. I think people should definitely cost you nothing to get on that website and read some of the really, really good stuff that you are writing. And but I thank you for spending just that lovely hour with us just now. Really appreciate it, Bill, and really do look forward to our next visit.
Thank you, Andrew. Thanks for having me back.
Thank you, Andrew Maguire and Bill Holter, for another fascinating discussion. And remember, to our entire Live from the Vault community, buy physical, make sure it's 1-to-1, and understand the difference between what Andy affectionately calls the casino paper gold and silver markets and the actual physical gold and silver markets. They're not the same. Don't be fooled. And there you have it. That's all we have for you today on another episode of Live from the Vault. Now, please help keep spreading the word about this channel by hitting that like button, share this information, and make sure you click on the bell if you want to be notified as each episode goes live. And with that, we'll see you right here next time on Live from the Vault. We'll see you then.